So this is the first time looking at the charts since like I think basically Friday, right? Friday was the last day looking at the charts. This is the first time looking at the charts since coming back. So what I notice, what do I see here, and what do I expect? Well, first things first is we gotta check news, right? Today news, you have nothing going on at all. Tomorrow you have nothing going on at all. You have some minor folders here and there, but nothing too major. Again, it's a pretty chill week from what I remember from last week. Wednesday you have flash services PMI, flash manufacturing PMI, and flash services PMI. You have Thursday unemployment claims, and then Friday you have whatever this is, revised UOM consumer sentiment. So no idea. Fed Chair Powell speaks as well on Friday. So I guess Friday looks like actually not Wednesday, Thursday, Friday isn't too bad. It shouldn't be too bad of a week. You should get some movement for sure. Won't be anything crazy. Not like it's NFP or FOMC or anything that will steer the direction or steer the markets in a certain direction, but it's enough to get the ball rolling. And that's all that matters, right? So yeah, let's do the analysis here. So starting off here with the monthly time frame, right? So right now I have no idea what's going on, chat, and I always tell you guys this, that basically whenever I have no idea what's going on, it might take me the first analysis to understand what's going on. It might take me two analysis. It might take me a couple hours sometimes. It might take me till 9 a.m. to understand what's going on today, right? But first step is to do the analysis to get your brain flowing and for you to understand, or for you to get a decent understanding of the markets today. So the monthly time frame, I'm looking at this and we have 10 days left, right? So these things are very key. Whenever you're looking at your analysis, it's very key to understand how many days you have left, when is the candle close, what price is doing right now, right? So right now I'm looking at this candle here, and this candle is bearish, right? So we're bearish after closing at resistance here. So what does that mean, right? What that means is that price found a resistance, we're breaking the lows, and if you look left, your next support is going to be down here at this next support at 1824. Right, that's your next level of support. So if you're breaking our lows, you're breaking all these lows to the left here. I'm talking this, I'm talking this, I'm talking you basically have clean traffic to drive down. The only thing that's stopping you here from driving down, if you were to get stopped from driving down towards 1824 or 1825, is if you were to sort of have the no top wick issue here. So no top wick on this candle on the monthly means that there was no liquidity being grabbed before coming down, right? But that can also mean that the previous candles already grabbed the liquidity already. That could have been the liquidity grab for us to drop down. Who knows? I don't know, right? But if we're breaking the lows here and the small time from now, the weekly, daily starts to like close below structure, close below the ranges, then they can indicate that the monthly might not flip bullish, especially if you have 10 days left. Because think about it, right? Typically when you create a top wick, you'll typically create it during the first half of the candle. We're on to the second half of the monthly. It means that you have 10 days left. The first half will be between the 15 and 14 day mark, right? But we're past that now. That would have been last Wednesday, last Monday, or last Tuesday if we were to reverse. Hasn't reversed yet. So on to the last 9 days of the monthly. You're breaking our lows. Look left. You got clean traffic to drop down. Could you come down to retest 1824? Possibly, right? There's a possibility you can come down this month. Nothing's guaranteed, but again, you're looking at just the overall direction of price. One thing I'm noticing here off of RIP for the weekly is the weekly, yes, it closed below the range, and my dumbass in 2019, 2021 probably would have been like, oh yeah, Don, we closed below the range here, next candle is gonna drive down here to retest the lows, right? But what I'm noticing off RIP, first glance now, right? Because we evolved, is where's the liquidity? Where is a top wick for us to drive down? And now it doesn't need a top wick to drive down. It can possibly still drive down towards where's next level of support. It can possibly drive down towards maybe possibly this week 1880, right? 1880 or 1865. Just for that bottom wick area, which is right here. That's what I'll say. That's a possibility for the weekly, right? But the reason I'm saying like you need liquidity is, if you think about the monthly time frame, for us to really drive down towards a monthly time frame, which is 1824, which is, where is it, down here in these areas, right? That's 1824. you're gonna need some decent liquidity, right? So you're gonna need to see like, let me just remove this real quick. Right, so I'm looking left here. If you guys look left, all the times that you drove down towards the next yellow box, right? So I'm scanning from left to right now. I'm trying to see, okay, well, where in the past have you driven down and what happened before driving down? So this candle close below drove down. This one didn't drive down the top 24, so it's irrelevant. That drove down. This drove down as well, but that's a little different. What it came from, it wasn't coming from above here. I want to see it coming from above here and then coming down. I guess you can say here. This came down as well, and then this came down as well, right? So that's what I'm looking at here. I'm looking left. I'm looking at those areas on price. I'm noticing that those areas came all the way down towards 1824. Now, what happened before you came down towards 1824 though? Right? What happened? So we went from 2020 being like, oh yeah, you closed below the range. Look left, you have clean traffic, right? Whatever it is, right? But now we're looking for a little more than that, right? So we because we have a better understanding of the charts now. We have a better understanding of the charts, and again, how the markets kind of move, and understand the different cycles of the markets, right? So in this case, like if you look left here, you're gonna notice that every time before you came down, what did price do? It created a top wick. It tapped a certain level. So let's see where the top is of each candle. So the top of this before coming down was this. Top of this was this. Top of this was this, right? My bad. This, right? Now, if you were to get the medium average of the top of those areas, you can possibly say, let's connect the dots and see. So you have this level right here. You have this, right? So if you were to get the medium average, which is 3 points here, you were to draw a line, tap all 3 points, you'll say around there. That's where the top should be this time around, and that's kind of what happened here. You guys gonna see. That's where price rejected. So is that enough for us to drop down now towards the next support? Possibly it can be, right? Possibly it can be in terms of overall direction towards 1824, because that's what happened in the past. In the past, every time before coming down towards 1820, closing below 1900, you came up to create a top wick, tapping into 1980, and that's what price did. So now that you understand the overall direction of where the weekly is headed, with the closure especially, where was the current weekly top wick now? So what I mean by that is like before the weekly created a top wick, right? Or before the weekly came down to fill 1820 in the past. So now you're looking a little deeper into the candles. You're looking at maybe, instead of looking at just the overall movement, you're looking at just the actual closure candle. So you're looking at this now. You're looking at this probably too. Looking at this, right? You're looking at this probably too. Like where was the top wick created? So let's go ahead and do it again. Draw a top wick here, top wick here, top wick here, top wick here. What's the medium average of those areas there to the left, right? So 1, 2, 3, 4. Pretty straightforward. Draw a line here, 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 here. What's the medium average? You'll probably say around here, right there, right? I'll say that's 1, 2, 3, that's 4. That's around the medium average, I'll say. So in terms of top wicks, that's probably what you want to see now, right? So that's what I'll do. So if I'm waiting for the weekly top wick now, I want to see price come up, create a top wick, tapping into that green box, which is not far away. It could tap it today easily. 1898, 1897 minimum, right before coming down. So you're gonna see that getting tapped, and then once it taps those highs and you flip bearish and you re-break the lows, where did the current candle drop down towards? So now you establish the overall range is dropping down towards. You establish the top wick areas. What do you gotta establish next? What could you pump down towards next? Because it might not fill the range this entire week. You're gonna see that these candles that pushed down, it was multiple weekly candles. It was like 2 weekly candles, right? In rare case, it could pop down one candle. Great, perfect. That'll be preferred, but it might not, right? So every time it closed below, what did the next candle come down and tap? Came down towards here, rejected. Or hold on. Let me just remove these lines here. All right, so looking at the current movement now in price. So you're looking at this. So it came down, closed below. What did it tap? This area. Came down, tapped this area for rejections. Rejections there. rejections here. So you're looking at C before coming down to fill the range, you rejected for obviously first, right? You reject and you pull back. All these counts, all these price points that pull back was around the same area here. You're gonna see. I'll say if you were connecting dots again, right? Same thing. 1, 2, 3, 4. You'll probably say that, okay, well, your level of rejections around here. So what the level is that this week? 1860, right? So if you were to come down this week, you might not come down to fill the range at 1820, but you can possibly fill 1860. High chance, especially with the fact, kind of giveaway here. Looking left, there's no bottom wick here on this candle on the weekly. So you're likely gonna come down to fill that bottom wick area and tap into those zones there. So cool, you established the weekly ranges overall, where it could come down towards because of the levels of tapped in the past. You now establish last time you closed below, where's the current top wick, and then you establish where's the weekly target if you were to come down now, right? So 1860 could get tapped this week after you create a top wick at that 1897, 1898 mark, right? So this candle is gonna end up looking like this by the end of the week probably. I'll see you on Friday there, right? So this is how the week is gonna look probably before coming down, right? So top wick and then just continuation towards the next support, right? So you also have a bunch of catalysts this week. In terms of catalysts, I mean like the red folders that you had, the major folders this week, right? So be on the lookout for that. But that's the overall direction of where I'm looking at price to head towards, right? So that doesn't mean I'm thinking I sell now. It just means that in terms of like if I'm looking for positions every day this week, I am gonna have I'll say like probably more sells than buys this week, and you'll see it during the week. You'll see me take more sells than buys probably, right? So that's the weekly. Now the daily, right? What the hell is the daily doing? I don't know. The daily looks like it closed below the range here, right? So close below 1900 here. Same thing that we're gonna do with the weekly, right? We're looking to see where we tapped in the past, what areas we rejected. So I'm probably gonna draw my support right here just to speed this up real quick, but I'll probably say right here because this is the most recent support here. Yeah, rejections here, rejections here, rejections here to the left. I would believe that with the closure below the range after creating a top wick here for the weekly / the daily, right? It's all the same thing in this case. After doing that, you're gonna flip bearish to drop down towards the next support, which is gonna be where next? 1875, right? So nothing too crazy. 1875 as your next support today. If you were to continue to drop down, the only thing that's missing is a top wick. Obviously on Friday you close doji, which means that you're still respecting these candles to the left. These candles all close below the range, right? So this candle here, close below, no bottom wick. Couldn't take any sells that day or on a daily because you had no bottom wick. Probability of you dropping down is a lot lower. Then you had this candle that closed below the range as well. The next candle closed doji on Friday. I think Friday you had news or something. But then today, after creating a top wick, it should continue to come down to retest the lows and tap into 1875. So I want to see that get tapped. But again, you have to understand too, we need a top wick, right? So you want to see 1897 get tapped. So if you go down to the small time from here, could we possibly take buys towards 1897 is what I'm asking myself. Now I'm like, okay, well, can we take buys up towards 97 and then all of a sudden take sells from 97 down towards 1975? There's a possibility, right? So let's drop down to the 4-hour time frame. 4-hour time frame off rip, right? Off rip. You're gonna see here, like, you're looking at these two major zones here. You're gonna notice that there's two key zones here. There's this zone and there's this zone, right? So that's your heavy support resistance, heavy supply and demand, whatever you want to call it. Wouldn't you think that if price were to drop back up towards 1902, 1900, it needs more liquidity to drop down? I'll probably assume with the 4-hour time frame that you'll see the motion print. By the motion printing, I'll assume that you'll probably see this form on the 4-hour time frame. You'll probably see price come down, break all the lows first, and then the retest, and then the closure, obviously, and then continuation up to retest the highs, right? So think about it. I'm not saying this is going to happen. I'm saying there's a possibility of this happening, right? Because off of price action, we tend to notice that before price reverses on trend, or not reverses, but pushes heavily to these ranges to the left, it will grab liquidity first. And the only way to grab liquidity here is if you rebreak the lows, right? So I'm thinking now, our top wick area was what? On the monthly, on the daily, on the weekly, or daily and weekly, it was 1887. Where's 1887? 1887 is probably around here, right? 86, 87, right there. I'll say because you're rejecting all these levels here. So could it be a possibility today that price heads up here, taps into 86 and it starts to reject the 86. Because again, your next target overall resistance is 1900, and for us to drop towards 1900, I believe you need more liquidity, even though it's not that far away. But still, could you possibly reject at 97 today, right? And then at 97 come back down, create that bottom wick on the 4-hour time frame before coming back up to retest the highs. Now the issue is you have 48 minutes left, which is an hour left into this 4-hour candle. Is that enough time to break the lows, break below 1884 and then come back up? I don't think so. I highly doubt it. Unless you have news, I highly doubt it. And today you have no news. That does not help it, right? So what could possibly happen here is, I'll say the 4 candle could close bullish, right? Who knows? It could tap into 1900 even. It could come up tap 1900 for all I know. But this 4 candle is going to close bullish probably, high likely, with the way it is, with the current bottom wick. The next 4 candle, you're going to see a bottom wick being created. Possibly. So if it's not this 4 candle pullback that pulls back, it's going to be the next 4 candle. The next 4 candle should be able to break the lows before making its way up. Because in order for you to drive back up to retest the highs and fill those ranges, you need to grab liquidity. And the only way for that to happen, is if you were to sort of re-break the lows and grab liquidity for it coming up to retest the highs, right? So obviously you're breaking the highs, the current highs right here, 1894. You're gonna see a push up towards 86, 87, but it comes down to how it reacts to 86, 87 that matters here. So 86, 87 is a key area to take advantage of when you come down to a smaller time from here. So let's go ahead into the smaller time frame and see what's going on. This is when you really want to lock it in, because you have your overall directions now kind of like printed out. You just want to see what's going to happen next there. So this 1 hour candle has no top wick, no bottom wick, my bad. If it taps 86, 87, we could possibly just take sells off rip. Yeah, so 1 hour candle close bullish here. That's cool. You have no bottom wick. High chance you're going to create a bottom wick. Areas of rejections in the past have been 86, 87. Let me see the 4 hour candle real quick again. I want to see what's going on here, because there's this resistance there, the support here, so that's cool. Before reversing on price, you're gonna see, yeah, this is what you're gonna see first. You're gonna see the retest of this low probably. So that takes you down to what level was that? Oh, that's a little far. Never mind. What is this then? Right here, 1880. I'll say that's doable. 1880 for a bottom wick, and then where did you reject in the past? 1900. So 1900 is your major level. You rejected there. Okay, 1900. All right, cool. So could be a rejection at 997. Could be a rejection at 99.9, which is 1900 basically. Let's see. So in the past, what level is this? What is this? 1890. Okay. 1990 for your most recent support. I'm trying to see if you can tap 87 here. $1900 again. All right, so that's a pretty decent level for now. 1900 rejected, came down, grabbed support at 1885. All right, that's cool. 87, what is this? 93. What was 93 again, chat? That's the 1 hour top wick. Okay, so it didn't close above. That's cool. Okay, so 1900 and 1897 are two major levels here in terms of pullbacks, in terms of where you're gonna reject that. So let me try and get more information though, because I need more information than that. I need to see directly what's gonna happen. All right, so 1900 rejected in the past, came down towards 1893. So how big is that range there? 75 pips. Okay, $7 move, not too bad. Rejections at 99 here, wasn't okay. So let's put it down here towards 1899. 586 could be the entrance instead. could get some drawdown towards 1904, 1903. Okay, cool. So yeah, you have, all right, there we go, bottom wick there, down towards there. Yeah, you have like a couple levels here that you can account for. 1899, 1897, 1893, and obviously 1885, but that's a little far from now. So that's what you want to look at here in terms of areas of rejection, right? So obviously with the 1 hour candle here, you're gonna notice that, what is that? My bad. You're gonna notice that you have no bottom wick here, and you close below the range too. You close below these ranges to the left, so there's a high chance this 1 hour candle is gonna flip bearish. Very high chance. So if this is a bonus too, because if you can come up tap 99.97, depends on how hard it pushes, depends on how the candle closes. You can possibly just take sells at 99, because then you can assume this candle's gonna end up creating a bottom wick at some given point before coming up. So even if you don't continue to drive back down, reverse towards 1885 and whatever, right? You're looking to catch and focus solely on this move here to the left. You're looking to catch from 97 to 93. That's why I was measuring it earlier, or 99 to 93, because that's like a 70 pip range, right? This range right here overall. So we're looking to take sells or like 99 or 97 to retest like 97. If you take sells at 97, looking to retest, my bad, looking to retest 93. So this range overall could be like a 30 to 60 pip range, 50 pip range. It's not bad, right? It's just about, can we tap those levels here or not? So once they actually come up and tap 97, 96, we'll make our decisions on where we want to enter, but that's what I'm looking at right here, chat. Possibly just 1999 to be honest though. All right, cool. So that's the analysis today. So let me go ahead and just clear it up a little bit, make this a bit clearer for you guys. And this would possibly change during the session, if I'm being honest with you guys. It's gonna change for sure. It's just the more data, the more I sit here, the more data I'll collect and the more I'll adjust to on price. But because the more you sit here, obviously the more accounts that close and the more information you have, which is good, right? You want more information. So that's what I do with my analysis every morning when I look at charts. I'm always putting that much effort into it just to catch 10 pips. Hold on, where's this resistance? Okay, 99. What was 87 again? This is okay. This is right here. That's cool. All right, let's go ahead and put that line there. Current resistance here, does that make sense? I guess that's fine. Let's put it up here a little bit, a little higher, and then